TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 42. You get the Nasdaq off 18. S&Ps are down 5.5. We have gold trading down $2.30 at $1,342 an ounce. Silver's down 23 cents at $19.88 an ounce. You get platinum flat at $1,053. Light sweet crude is also flat at $46.22 a barrel. Notes, the 10-year note up one tick, 130.28. 30-year bond up 6 ticks, 167.22. Both the notes and the bonds, folks, moved higher today, had lighter volume, rejected higher price. Bottom line, looks like notes and bonds are doing a very large ABC structure on the way down. King dollar up 84 ticks, 95.46. What you had with King dollar is this. King dollar rejects lower price yesterday, has lighter volume, rejected lower price this morning. Bottom line has lighter volume. King dollar's at that 95.47. And after the Fed announcement that they were not going up on rates and they may go up in December, bottom line, King dollar still didn't break a swing low. King dollar wants higher price. King dollar looks like it's going after its July high, which is the 97.50 area. The euro is trading at $1.12, and the yen is at 100.91. When we take a look at the S&Ps, this is what you have. For the traction that the Nasdaq and the NDX has, S&Ps, Dow do not have the traction. In fact, it looks like the S&P right now at the end of today is going to fail on the daily, fail on the weekly on price and volume. A close under 217.03 would be a failure. Where that failure is coming in, folks, is where we gap down in all the indices on September 9th. Bottom line, that's how this baby is set up right now. We go to the Dow Industrials. The Dow actually failed yesterday. Dow gets into the gap, couldn't handle the gap. The Dow is under the gap right now and hasn't broken its downtrend that started in the Dow Industrials going back to August 15th. NDX 100, different ball game, and we'll see what type of pressure we get inside the Qs out here today. Thus far, you're down 43 cents, no big deal. You've done 43 million shares. The number to keep your eye on the Qs, we're at 118.66 right now, and you're talking about 118.12. So if, in fact, the Qs fail today, that would be a huge heads up because the Qs and the NDX 100 and the NASDAQ composite had while they broke topside, the volume wasn't bad, not great, but wasn't bad. They had every right to keep going, and if you have a failure within the first day, that is a huge heads up. That way, not only going lower, you're going to see lower very quickly. Gold contract. What do we have with gold? Gold contract got over its highs yesterday, had lighter volume, is having a hard time holding price out here. It looks to me that there's been a seller, folks, in the physical market at approximately the 1350 to 1360 area, and that seller is still there because it's having a tough time getting up and over that area. Bonds. We go to the bond market. What we have with bonds is this. They continue to want lower price. We have out here this morning, what you're going to see is that bonds, once again, tried to get to higher price, sold it off, going to have lighter volume. Right now, the 10 years at 130.28. That baby wants lower price. We go to the 30-year. 30-year is trading at a price point of 167.20, and that looks like it wants to get into the 160 area. And what is it all about? It's all about King dollar. It's pretty amazing. King dollar just refuses to die on the vine, folks. King dollar wants higher price. You've had higher lows in a huge way. Bottom line, we've had a few higher highs. King dollar right now is at 95.45. King dollar wants to get up and into this July high, which is the 97.40 area. On Fed Day, we did have a high volume spike. That high volume spike is going to be the first place that King dollar is going to go. And the pressure that King dollar continues to push on the marketplace is what this selling is all about. King dollar just can't stand. Market can't stand King dollar. This 10 a.m. update is brought to you each and every day by EverBank. For more information on the products they offer, you can give them a call at 855-750-4051 or visit everbank.com/TFNN. Have a great day. Have a safe day. Have a great weekend. Look forward to speaking to you right back here Monday morning, 10 o'clock. If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new market-safe focused commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.